Hey guys, good evening. This is Dave with Moniology. Hope everyone is having a great weekend. This is the weekend market review for September 9th and 10th. Let's have a look at the charts. Okay, for those of you who are new to our charts, what we try to do is we try to take a look at some of the major indices in the market, both on a daily, weekly, and monthly time frame where relevant, to try to extrapolate what's going on in the market and what we can expect to see in the coming weeks and months ahead. So we start here with the 10-year U.S. Treasury chart. This is the daily. What we see clearly that we're in a correction, for lack of a better word, on the 10-year Treasury yield. There's nothing more to see aside from this 19 area as probable target point for this decline here. Looking here on a weekly chart, we see clearly here that RSI is broken below that 40 line on the RSI, and it's very likely that again we test this lower bound of this bullish flag. So why do I say it's a bullish flag? Well, in the longer term time frame, on a monthly and a weekly basis, we are in a bullish yielding pattern. So we've been in a correction for all of 2017, and we think that in the short run there might be lower prices, but in the longer run we think that this is going to hold, and eventually it's going to break to the upside, yielding higher yields in the years ahead. And just looking at this on a monthly time frame, we're breaking below that 50 on the weekly RSI, which is precisely why we're seeing more weakness. It's possible that we go all the way down to test this 38 to 40 zone, which is really where the last breakout happened, which is what typically happens is RSI retest the point from which the price broke out from. And we really broke out in price around when RSI was around 38 to 40, and now we're looking like we may just want to retest that zone here in terms of momentum. Let's have a look. It's very important to see what MACDs do here as they approach zero. Do they roll curve back up, or do they roll below zero? We'll see. Next on the list is gold. Gold has been the best performing sector in the market over the last, one of the best performing sectors in the market over the last couple of months, and it shows no sign of slowing down, although it's very possible we will see a short-term pullback here in the coming days ahead as we see this shooting star pattern, and it's we haven't yet received confirmation with a break above that 1360 area, but let's see what gold does over the next couple of weeks. But I think a pullback towards 1320 is definitely in the cards, but ultimately this is a major pullback, major breakout, as we'll see on the weekly and monthly charts. So once we broke above 1300 here, that was clear sailing as far as I can tell for gold for the coming years ahead. And we'll continue to see some resistance, primary here at 1378 to 80. That should be some stiff resistance, but ultimately RSI has broken out significantly above that 60. It's kind of a triple top here. It was just a major point of RSI momentum resistance, and we broke out above that even before we broke above 1300, which suggested that we would follow suit with price, and sure enough, that's what's happening here. And this is just one of those areas you just have to go long and ride the trend to see where it takes you. And here again on the monthly, want to point out that price is at 1351, lower than 1377 at previous highs, but the downtrend has been broken, and RSI momentum is at the same level it was where price was 20-30 points higher, and that's just another sign of positive momentum here on the monthly chart. So big and very bright things ahead for gold. Taking a look at the high yield junk bond ETF JNK, when we looked at this a couple weeks ago, I suggested that this bounce was very possible, but wanted to see how things reacted here around this potential double top. One of the things that suggested that things likely would roll back over is that RSI momentum here was not as strong as it was here. So similar price point, but negative divergence, and that is a very bearish indicator, certainly on the daily chart frame. So we think that the next reasonable price point is around 36.50, and that likely breaks, and we likely make a run towards the 200 EMA of 36.01. We'll see what happens there. Likely breaks at the very least just to wash out the weekends, and then potentially bounces thereafter. We'll see. On the weekly chart, further bearish, also very bearish. It's been a bearish wedge here that's developed over the last 2 years, and we finally broke below it, retested from the downside. Now we failed to retake that trend line, and now on the daily we saw that 36 is very likely. It's possible on the weekly, if that breaks below that we'll make a run for that 34.50, possibly as low as the 33 zone. So a lot of potential downside ahead for the weekly junk bond ETF J&K. Now, just as a broader sentiment on the overall economy, this suggests that credit quality conditions are worsening. And when you look at the bank charts, which are not included in this video, but perhaps will be posted in another video, things are very, very weak there right now at this point. So something you definitely want to consider. We believe a correction has started in the overall markets, and it's a broadening top, but it will roll over to the downside, and we'll ultimately see a 5, 10, 15, potentially 15, 20% correction at some point over the next 12 to 24 months. And here's a monthly chart, but nothing to see here. This is still a bullish chart, so long as that 36 zone holds on the monthly time frame. Crude oil daily. Nothing really to see here aside from the fact that we tried to make a run for that 50 on the RSI, on the price point, and we failed. And we failed with negative divergence, which is not a positive development here. We've been relatively bullish on oil looking at the weekly chart, but the daily doesn't look so good at this point. You want to see 45 hold, or our bullish thesis is probably no longer in the cards. Taking a look at oil in the weekly chart, we've been consolidating for a better half of 2 years between that 40 and 55 zone, and we couldn't break above 50, and so a lot of the traders that anticipated that break are probably selling their longs. If we can't hold above that 45 zone, and we likely then retest this RSI breakout from the upside, which is bullish if it holds, but price may actually break down below 43 or 45 zone and go lower, while RSI is still building a positive divergence. So again, longer term, I'm fairly confident that oil will break to the upside, but in the short term there is some significant weakness to be aware of. And on a monthly, I still see that inverse head and shoulders, but when you look at a monthly chart, it might take months, if not years, to resolve itself to the upside. So stay tuned, be cognizant of what's going on, have a watch list, but I wouldn't be long in the sector until we see some substantial break above 50. Nasdaq Daily, still showing weakness. We had negative divergence here in RSI, and I still think we're gonna make a run to test this 200 EMA on the daily at about 59.67. Well, let's see what happens. On the weekly chart, similar type price action where you had this wedge here, similar to the junk ETF. We retested this from the downside, but notice again here, continuing weakening of the RSI. That's a very bearish development. If the weekly Bollinger Band around the 62.40 level does not hold, the next logical target is that 58.90 area of the 50 EMA, and if that doesn't hold, then about 52.50. But pretty sizable correction is likely taking place. And monthly chart, again, this bearish wedge. If that I'd say 6400 area isn't broken to the upside, I'd say we will have some significant downside in the months ahead. Russell Daily, so far so good on this bounce. We had this nice bounce, and we've retraced kind of in a bullish flag formation. So long as 50 on the daily RSI holds, this likely sees further upside, but If that breaks to the downside for whatever reason, then likely this bounce is over. Russell Weekly, no surprise, we're pulling back precisely where we broke down the first time around here, where we see this. You draw this trend line here, and this is where price broke, and precisely RSI broke here, and that's where we're seeing weakness and inability to break out of this bounce on the RSI. So if 50 is broken on the weekly RSI, that should confirm that this bounce is just a dead cat bounce and lower prices likely ahead. And the Russell Monthly, similar price action where previous highs in RSI have not been able to be taken out, and so now we're creating kind of this rounding top formation right below that 70 on the monthly RSI, and we're not. So we're creating lower RSI and higher prices, and that's a negative divergence that's being developed. Be very, very cognizant of what's happening over here on the monthly MACDs. If that breaks below zero, look out below. Daily S&P looks weak. Looks like it's setting up to roll below 50 on the weekly RSI, which means that likely test of the 24, I'd say it was that 24, 25 area, it becomes comes into the cards, and ultimately a move towards 2400 becomes increasingly likely. Weekly, continued weakness, inability to break out above previous RSI highs suggests that we're going to make a run towards 50 on the weekly RSI, which means very likely 2400 is in play, possibly 23 and 2200 become in play if 2400 cannot hold. RSI monthly, so far so good. There's nothing really to see on the monthly chart, so if you're a longer term player, you're long until proven otherwise. Stay tuned, but you want to see 2500 broken to the upside to confirm the next leg higher in this market. The tips to long-term Treasury bonds. This is the chart that you want to watch to get a sense of what's going on with inflation. Right now, you're seeing a little bit of an uptick on the daily in tips relative to long-term bonds, but nothing substantial. You want to see this downtrend taken out to the upside to confirm any sort of development in inflation. And weekly chart, though, is still this bullish flag pattern that eventually, in our opinion, very strong opinion, will be taken out to the upside, and that's where you do not want to be long bonds unless you've got a very long-term horizon. And a monthly, same type of bullish flag pattern formation. We might see some additional downside here in the short run, but over the long run, this will break higher, and that'll confirm your cue to either get out of bonds or start shorting bonds, depending on what your investment strategy is. The U.S. dollar daily, gosh, I mean, it's just bearish beyond belief, and it continues to move lower. And there's just, I mean, for us who've been bearish since 103, this has been a very, very positive development. But most institutions over the last couple of years have been exceptionally bullish in the dollar, and they've been hedging their international bond positions, and frankly, it's really slaughtered their returns. Frankly, it's kind of stupid from our perspective. But bottom line is, dollar's weak, and we see no sign of any turnaround here. Break below here on break below 91 likely takes us to the lows, towards the lows of around 84, which we think ultimately, as we see here on the monthly, will be retested. So ultimately, we think 87.50 is the next monthly price point that we'll likely head toward. I know we've got this 200 monthly EMA, which is around 90, which will be very strong support. So we might see some consolidation, possibly some bouncing action, but ultimately 87.50, followed by around that 80 to 84 zone likely is to be tested. When you look at the volatility chart, this still seems to me like a bullish flag, and it's been suppressed every time this line has been hit here. but we see some balance in RSI. We're consolidating above the 50 on the weekly RSI. MACDs are moving higher, and wouldn't be surprised to see some renewed volatility in the markets in the coming days and weeks ahead. Here again is that kind of bullish flag formation that's been taking place on the VIX on the weekly and monthly, as you'll see ahead. If this breaks this trend line to the upside, that's your cue that the markets are indeed in a correction. Until that happens, we're just in just some up and down volatility zone. Here's the monthly, same thing. You want to see this breakout if you are a bear on the market. But again, look at the divergence here on the monthly RSI. That's what gets me concerned most if you're a bull. If this breaks 50 on the weekly RSI, that's going to be a substantial move to the upside, and there's going to be a lot of short covering on the volatility ETF. So definitely one you want to consider. Finally on our list is the World ex-US chart here. I mean, the world stocks look fantastic. We've been pointing out for a long time, world versus US ratio charts have suggested that we're in a new bull market of world stocks versus US stocks. Now, this is where you want to be. But at the same time, wouldn't be surprised if we start pulling back. Look, we've got this double top on the daily, but RSI has not matched the previous highs, which is this negative divergence, which ultimately will result, in our opinion, in a correction. On the weekly chart, we broke down below this upper trend here, and now we've retested it multiple times from the downside. Continue to see this negative divergence on RSI, and we think lower prices are indeed ahead. And finally, on the monthly, if 2000 is broken to the upside, our negative thesis in the short run is completely invalidated, and you want to definitely go long with a target of 2400. However, if 2000 cannot be broken from the upside on this MSWORLD index, then much significant downside is ahead, possibly as low as this 1500 area, which don't have the numbers in front of me, but that's probably a 10 to 15% correction. So stay tuned. Guys, thanks again for watching. Feel free to send us your feedback on StockTwits, Twitter, or on our YouTube channel, all at Moniology. Thank you. Have a wonderful week ahead, and good luck trading.